You know how you've been talking about different company results, right? Well, guess what? HDFC Bank just dropped their numbers and it's quite a mixed bag.
Oh, really? A mixed bag, huh? I mean, I've heard they've been doing quite well. So, what exactly does that mixed bag look like? Let's dive right in, I guess.
Yeah, so from what I gather, their consolidated net revenue, right, is at about 652.8 billion rupees for the quarter. That's a big number if you think about it. So I was expecting a good jump there, but was it really that impressive?
Well, yeah, it's a significant amount, but what about the profit? I mean, revenue is one thing, but the profit is what matters, right? Did the profit grow as much?
Right, and their consolidated profit after tax, or PAT, came in at around 176.6 billion rupees for the quarter. So not too shabby, but the report also mentions this adjusted PAT growing by about 13.1%. What do you make of that?
Well, the adjusted PAT growth is actually quite noteworthy as it removes the impact of certain one off events. It's like fine tuning a musical instrument to get the best sound, you know. The underlying business seems to be doing well.
Interesting. It's like they're telling us, hey, ignore the noise and focus on the core business. So, what about their earnings per share or EPS? How much is each share actually worth?
Okay, so the earnings per share or EPS is at about 23.1 rupees for the quarter. And the book value per share is at 656.6 rupees. This is a decent indicator of their profitability for the average investor. Is good for understanding, the value of their shares.
Right, it's the nuts and bolts, I suppose, right? Now, how do the standalone numbers look? Is the bank doing as well on its own compared to the consolidated ones?
The standalone numbers actually show the bank's net revenue grew by 6.3%, reaching about 421.1 billion rupees. So it shows that on its own, without its subsidiaries, the business is also healthy. That's also a positive sign, right?
Absolutely. And net interest income, that's like the difference between what they earn on loans and what they pay out on deposits, right? How's that looking?
Well, net interest income grew by a solid 7.7%, coming in at around 306.5 billion rupees. Core net interest margin is 3.43% on total assets, so it's quite stable and healthy. That's like the heartbeat of any bank. So this looks pretty good.
That's pretty solid, actually. Another income, that's the non-interest revenue, right? What are they making from those areas, things like fees and all that?
Right. Their other income is about 114.5 billion rupees, and it comes from different streams like fees, commissions, forex, and recoveries. So, like, they're not only focused on interest, but also all these other services that contribute to their revenues.
Okay, so their revenue streams are pretty diverse. Now, what about their expenses? Are they like keeping costs in check or are they like overspending?
Their operating expenses for the quarter were 171.1 billion rupees. So there was an increase of 7.2% from last year. I mean, there is an increase, but it's an expected increase, I guess.
Okay, that's a little higher, maybe something to keep an eye on. And provisions and contingencies, that's where they set aside money for bad loans, right? How much are they setting aside there?
Right. Their provisions and contingencies were about 31.5 billion rupees. That is a little lesser than last year's number. So it does show some improvement in the quality of assets, it seems.
Yeah, okay, so they're setting aside less money for bad loans. That's like a good sign, right? What's their profit before tax or PBT, like the amount of profit before the tax is paid?
The profit before tax or PBT for the quarter is about 218.5 billion rupees, which is quite a considerable amount and actually shows the strength of the bank before tax considerations. So a solid PBT figure.
Okay, that sounds good. And finally, their profit after tax or PAT, that is the actual profit they get to keep after paying taxes?
Right. The profit after tax or PAT stands at 167.4 billion rupees for the quarter. Also, the adjusted PAT grew by 13.6%. So they're managing the costs and taxation pretty well. So all in all, a solid profit number.
Okay, that is pretty insightful. Now, before we go further, if you're enjoying this breakdown, please hit that like button, share it with your friends, and of course, subscribe to our YouTube channel for more of this content. Really helps us out. Thanks. Okay, so let's continue. What about their balance sheet?
Right. So The total balance sheet size of the bank is at 37,590 billion rupees. That's like all their assets and liabilities combined, which is a big number and shows how big they are as an institution.
Wow, they're huge. What about the deposits? Are people putting their money into the bank?
Oh, yes. The average deposits for the quarter were 24,528 billion rupees. That is an increase of about 15.9%. So people, trusting the bank, it seems.
Okay, that's a good jump. And CASA deposits? Those of the current and savings account deposits, right?
Right. So average CASA deposits grew by 6% to 8,176 billion rupees. The total EOP deposits were at 25,638 billion rupees. So people are putting more money in both savings and current accounts.
Okay. People trusting the bank to keep their money safe. Now, loans and advances, how much are they lending out?
The bank's advances under management on an average basis were about 26,276 billion rupees, an increase of 7.6% compared to last year. This shows that lending is healthy and also contributing to the bank's revenues.
Okay, so they're lending more money and bringing in more interest income. What about their asset quality? Are they managing their loan portfolio well?
Well, gross non-performing assets or NPAs are at 1.42% of gross advances. It's like weeding out the bad seeds in a farm, right? It's slightly better compared to the last quarter. So the loan quality seems to be improving.
Okay, the loan quality is improving. Now, they have a bunch of subsidiaries too, right? Like HDFC, Life, and all of that. How are those doing?
Right. So HDB Financial Services net revenue was 5.0 billion rupees and profit after tax was 4.7 billion rupees for the quarter. So that's decent. And their loan books also seem to be growing.
Okay, HDB is doing well. What about the insurance business, HDFC Life? Is that also making money?
Oh, yeah. HTFC Life's profit after tax was 4.1 billion rupees for the quarter. So it's also growing at a decent pace, with about 13.7% growth, I guess.
Okay, good to hear. And also HDFCARO, their general insurance business, are they also doing okay?
Well, HTFCARO's profit after tax came in at 1.0 billion rupees for the quarter. That is a little lesser than last year, but still contributes to the group's revenue.
Okay, it's important to see that all the subsidiaries are contributing. And one more thing, capital adequacy. Is the bank having enough capital to absorb any shocks?
Yeah, the bank's total capital adequacy ratio or CAR is at a healthy 20%. It's a safety net for banks. A higher CAR shows they can withstand any financial turmoil, I guess.
Okay, so it's a pretty well capitalized bank. And their network is also pretty huge. How many branches and ATMs do they have?
Yeah, they've got around 9,143 branches and over 21,000 ATMs across 4,101 cities and towns. I mean, it's all over the country. And so it makes access easy for their customers.
Wow, that's a massive reach. They're really everywhere. So, finally, what's your take on HDFC Bank's performance? I mean, if you were to summarize it for me, what would you say?
Well, despite the mixed bag of some increased expenses, their core business seems healthy and has strong growth in deposits and loans. The profits are decent, their capital adequacy is robust, and their reach is also immense. So they are well poised for growth, I guess.
Okay, so it's like a well-oiled machine moving steadily forward. But what's the outlook for HDFC Bank from here? What does the future hold for them?
I think, with the growing digital footprint and also a massive network and solid financials, HDFC Bank is well positioned for sustainable growth. But it's also like navigating a ship in a stormy sea. They will have to adapt to the market conditions and also the competition, I guess.
Okay, that's a great analogy. So challenges are always there, but they are well equipped to handle them. And with that, we have come to the end of this discussion. Any final thoughts?
Well, these results are definitely worth pondering over. And it's great to see them adapting and also growing. Let's see how the next quarter turns out for them, right?
Absolutely. So with that, thanks for listening, folks, and we'll catch you in the next one.
Right. Until then, take care and thanks for tuning in.